Hey guys. So I majored in finance and banking and economics. And after college, I moved to New York to work in finance. So I've worked in bonds, CDOs, Forex. I'm relatively well versed in global financial markets and the US housing market, but I'm obviously not an expert by any means. After all, I did go to Mizzou. So I remember sitting in one of my macroeconomics courses and thinking naively about all the positive changes that globalization was going to make on world markets in the coming years. So I thought that trade would be freer and that markets would open up, maybe a world currency would arise. Of course, now I look back and see that even in a data-oriented field, I had been completely indoctrinated by my professors. I point this out because it should be disconcerting to everyone that economists with leftist philosophies are being churned out by biased academia. If students, their teachers, and distinguished economists have a stance, regardless of the weakness of their data, it will be a powerful stance. Economic collapse typically is not an event. It's usually a progression, and by the time I was in college, the real estate collapse was well underway, yet I was still being indoctrinated with material touting the benefits of globalism and Keynesian economics, which advocates government spending as a means of stimulating the economy. And as we've all seen in the last decade or so, this does not work. Money used to mean gold and silver. Before 1928, bills were exchanged for gold coins paid to the bearer on demand. Historically, large purchases were more often made outright. But now, to finance these same purchases, we all borrow. So US household debt has increased by 122% since 1955. Our economy is built on a fundamental flaw. Your debt cannot exceed your income if you want to have a truly healthy economy. And household debt relative to GDP remains higher than it was for almost all post-war history. Our government, of course, has adopted this monetary philosophy. They finance deficit spending through treasury bonds, then they pay back principal and interest out of future taxation. Of course, this has allowed the national debt to soar to $19.4 trillion as of today. And the borrowing economy even applies to interbank transactions. So banks are required to hold an adequate amount of liquid assets to manage any potential bank runs by clients. So basically, they are collectively hedging the risk that is posed by fractional reserves, which means that any given bank does not hold the assets tangibly that are reflected on their balance sheet. So if banks cannot meet certain liquidity requirements, they need to borrow money from other banks at the end of the day to cover that shortfall. So as you can see, interbank lending flatlined in 2011, and that happens when banks are not borrowing money from one another, not lending, and they do that very often when they are hoarding liquidity, which is often interpreted as a sign that banks are very concerned about a bank run. There is so much back and forth with currency. It is so convoluted that the more powerful this monster becomes, the further it gets from a real economy that provides actual goods and services. I have worked for many financial firms, and every single job I have had has been related to managing other people's transactions. I worked for a firm that made tens of millions of dollars for hedge fund managers just through Forex trading immediately following the mortgage crisis, despite this not actually being a period of recovery. The stock market has also fallen into the trap of wealth creation through debt and through transactions that profit today from future events. Although the entire stock market is based on this philosophy, short selling comes to mind. And this is when you attempt to profit from the future decline of a security's value. Even though this is the exact opposite of the general objective of the stock market, which is to bet on a future increase in a security's value. Short selling has been banned a few times throughout history because it's easier to manipulate markets to drive a security's value down than it is to do the same and drive a security's value up. So today, the US has more liberal short selling regulations than almost any other country. But the most notable offender of fraudulent wealth creation in recent history has been through home buying and mortgages, whereby money just comes into existence by being reflected on a lender's balance sheet, just through the very action of the loan being taken out. In the decade or so prior to the 2008 crisis, Fannie Mae began a humanitarian effort to help get poor as shit people with terrible credit in homes, because that is apparently their right as dreamers of the American dream to own a home. Can't imagine what's going to go wrong here, guys. Can't imagine. You can see the subprime lending surge between 2004 and 2006. Keep in mind that Fannie and Freddie were GSEs. That means they were government-sponsored entities. So they operated in part through government funding. The Affordable Housing Law required Fannie and Freddie to meet government quotas when they bought loans from banks and other mortgage originators. So since these borrowers were considered so high risk, their mortgages often had unconventional terms that reflected that risk, like high interest rates or variable payments, things of that nature. So by 2002, Fannie and Freddie, government entities, had extended more than $3 trillion in mortgage credit to individuals. Naturally, people wanted to find a way to capitalize on this. So they created mortgage-backed securities. Eventually, the stock markets plummeted 20%. The government took over Fannie and Freddie since they were overexposed to the subprime market. And to control inflation, the central bank implemented quantitative easing by buying financial assets from commercial banks and other financial institutions, thus raising the prices of those financial assets and lowering their yields. And while this was happening, they simultaneously increased the money supply. During the 3 rounds of quantitative easing executed, the Federal Reserve bought bank debt, mortgage-backed securities, and treasury notes, totaling $3.5 trillion. $3.5 trillion. Ultimately, this monetary expansion ended up just being a huge wealth transfer from the private to the public sector. Additionally, the assets generate billions of dollars of interest income, which was transferred to the Fed and ultimately the Treasury. I have no reason to believe that quantitative easing has done anything to promote an actual economic recovery. No fundamental improvements have been made from 2008, and a 2015 McKinsey study shows that there's $57 trillion more in global debt than there was in 2008. Problems are worse now because our brilliant solution was to borrow more and count the spending as economic growth. Debt is growing far faster than GDP, and debt to GDP has just skyrocketed. The only thing that is allowing us to kick the can down the road and not feel the effects of inflation is keeping interest rates ridiculously low. The last 3 quarters of economic growth averaged less than 1%, if you trust the government's estimate of inflation, which is removed from nominal GDP. If you don't, which I don't, obviously, that means that we may have already entered a recession unbeknownst to investors or the American public. Billionaires are thought to be hoarding $600 million in cash each. George Soros has doubled his put options for exchange-traded funds that track the S&P 500. So if there's another financial crash and the US stock market plummets, he's going to make a fortune. Also, according to a new SEC filing, Warren Buffett is sitting on $55 billion in cash through his company Berkshire Hathaway. So it costs him $29 million every single day to keep the money out of the markets. Our economic system and housing market are built around the belief that you can bring wealth into existence through acquiring debt. While quantitative easing has allowed us to delay the inevitable, it has not improved any of the foundational issues of the economy, and it has driven us into a hopeless amount of debt. Hopeless. There may be another round of quantitative easing that prevents this for maybe a few more years, but it is a pointless exercise because this is coming. We need to let the system die so that it can be restructured and rebuilt. What that means is that we need to see big banks fail. We need to see interest rates go up. We need to allow the housing market to truly collapse. This will make for an extremely difficult few years, but we can come out of this with a better system for all of us. The danger that we're in is the potential of a Clinton presidency, where the main objective is for economic shocks to be delayed until the subsequent presidency. I believe that Donald Trump is really our only shot at restructuring our debt. Under Hillary, national debt will continue to climb at an unsustainable pace, and the collapse that will follow her presidency may be much worse. As always, thank you for watching. This presentation just got too big, so I made a second part that I will be releasing tomorrow about how to protect yourself from housing and economic downturns. And a big thanks to my patrons that allowed me to really up my production value these last few weeks. I'm still learning this stuff. Before this, I had never done any video editing or been in front of a camera. So these things will continue to get better as I invest more and more in my channel with all of your help, and I really appreciate it. So I will see you guys soon. Bye.